Ever heard of the support and resistance in trading? So in this video, you will learn what is support and resistance, how to draw the support and resistance in a ranging market, and how to draw the support and resistance in a trending market. So, what is support and resistance? Let me explain. So, let's say price comes down lower and then goes up higher. Comes down lower, goes up higher, comes down lower, bounces up higher again. So, at this point, we can identify this area as an area of support. So, because if price returns to this area for the fourth time, there is a chance that the buyers might step in and push the price up again. So this occurs due to a self-fulfilling prophecy. If many traders observe this pattern, they expect the price to hold and rise further. So for instance, let's say a stock, right? Or a Forex pair or crypto pair, anything, right? And it drops to $10, for example, right? And then it bounces to $20, drops back to 10, bounces to 30, and so on. If many traders notice this pattern, like how the price has jumped from 10, right? They might think that this is a good place to buy because it has happened multiple times. So this $10 level becomes a self-fulfilling prophecy. Traders expect it to bounce up again, right? Creating buying pressure and pushing the price higher. So that's the idea behind a support. So on the opposite side, we have resistance. This is an area on your chart where the selling pressure could emerge and push the price lower. So it looks like this, right? So the price rises, encounters selling pressure, falls back down, right? Tries to break again the previous highs, faces selling pressure again, drops back down. These cycles repeat for the third time, with the selling pressure driving the price lower each time. So here, we can identify this area as a resistance area on the chart because price has struggled to move above it. So, if it returns for the fourth time, right, this resistance area might hold, causing selling pressure to push the price lower. Make sense? Right? So, another important concept to note is that when the support is broken, imagine the price dropping, then reversing upwards, dropping again, and then reversing upwards once more. So let's say at this point, right, you can draw this area of support, okay? Then on the third time, it doesn't hold, right? Instead, it broke below the support. So you can see here that this was the previous area of support, right? And now when price returns to the previous area of support, it now acts as a resistance. And this is where we can anticipate selling pressure to come in and push the price lower. So you might be wondering, right? Hey, why does this happen? So let me explain the theory behind it. When price retests the support for the third time, some traders believe it will reverse and bounce higher. So they buy at that level, right? And then what happens is that the price kind of doesn't work out the way they expect it, right? And then it moves against them, causing them to experience losses, right? As price declines. So for instance, let's say you purchase the stock, right? XYZ at $10, but price falls to $9, right? Continuing to drop further until like, oh, that's pain, right? So then suddenly there is like a spark of hope, right? And price drops from say $2, right? And starts to rise again, reaching what? $3, $4, $5, $6, and then eventually returning to your initial entry point at $10. So in this scenario, your trade finally, it comes back to break-even level, right? Initially, right, you saw significant loss, but now there's a glimmer of hope as price, right, as the market returns to your entry price. So at this point, you might think, right, okay, that's it. I had enough. Let me close the trade, right, and move on to ease the discomfort. So you sell, right, your long position, essentially getting rid of your shares, right, your stock in say stock XYZ. So when price returns to the level where you bought initially, right, it means you're breaking even, right, after facing the losses earlier. Now you decide to sell, right, and it adds to the selling activity in the market. Okay, so this selling pressure can make it harder for price to go up, right? And this is why, like, some people think that, hey, when a price level that acted as a support, right, where price stopped falling, is broken, it might become a barrier for price to rise again at the same level, acting as a resistance. So of course, there are other factors too that influence the price reversals at this level. Okay, other traders might also notice this pattern and see it as a self-fulfilling prophecy. This means that, hey, because it's taught in a textbook and courses out there that if it breaks, if the support breaks, right, it could turn into resistance. And traders start selling when price hits that level. So if there is enough selling pressure from these traders, the previous support level could act as a resistance. So essentially, there are a couple of theories behind this of to why this happens. Okay, so now let's have a look at the charts to see how support and resistance work in action. So as you can see on the charts, there are several lines marking the support and resistance level. So don't worry, right? I'm going to explain later how I identify these areas or levels. But for now, just pay attention to the idea that I'm going to explain to you. We have an area of resistance. The price has tested it multiple times. Once, twice, thrice, the fourth time, the fifth time. So here we are looking at an area of support. The price has tested it once, twice, and then it dropped down, right? We can consider this as the third test, and then it moves upwards. Now, you pay attention here. Notice how price dropped lower, broke right below this area of support. What used to be an area of support, providing like the floor level for the price. Right now that price has broken below it, this could turn into resistance. So we can actually observe like this phenomenon right here. Right, the price went up, but it was rejected at the previous support, right? Which has now becomes resistance. Then it went down again, retracing to test this resistance area. Went down once more, right? Retracing to test the resistance again. And finally broke below it, or what we would consider a swing low. Once more, we can see the same concept in action. This swing low now acts as a resistance. The price heads lower, retraces to test this resistance, then heads down again, pulls back slightly, and then continues downward. So right now, the price is retracing to test the same area of resistance here and here as well. So now, the price is sort of in a neutral position, neither clearly above nor below. So this demonstrates how the concept of support and resistance comes together, right? Showing the dynamics of price movement in the market. Okay, here's another example. Let's take a look at another chart. This time around is the pound Aussie pair. This is relatively easy to understand. This is an area of resistance, right? The price has tested it multiple times, once, twice, thrice, right? 4 times, 5 times. So this area has been tested as support here, here, and here. Okay? So now, right after acting as resistance, it then shifted to act as support. So let's move on to another example, right? Looking at the chart, platinum. So if we focus on this part of the chart, you can clearly see that this is an area of support. Now, if you take a step back and if you look at the previous data, you might notice that this support area was actually a resistance zone before. So when price breaks out of that resistance, it transforms into a support level. Okay, so you can see the same pattern repeats here, right? Initially, it's an area of resistance, and then when price breaks out of the resistance area, it comes back to retest it as a support before continuing upwards. Right? This area was previously acting as a resistance. So when price hits higher and then retraces, it tests the previous resistance level, which now functions as a support. Okay? So when price tests a level multiple times and holds above it, it establishes a new area of support. Right? So I hope that the explanation is clear, right? So this is basically how support and resistance works on your chart, right? This works essentially into any vehicles out there, whether it is stocks, Forex, right? Crypto, commodities, etc. Right? So it is essential to practice and observe how price acts around these areas, because this is like the key foundation of trading, right? So keep an eye on how price reacts at these support and resistance levels on your chart. Okay? So the real question is, do I draw these areas of support and resistance on my chart? Right? This is what we're going to cover next. There are various methods depending on the market condition. Right? Let us focus on drawing the support and resistance level in a ranging market. Okay, so here's how you do it. Number one, you identify the highs and the lows of the range. So personally, I prefer to pinpoint the extreme highs and the lows of the range, because they are where you see usually the most powerful reactions, right, when trading the support and resistance. So when drawing the support and resistance, I mainly focus on these key highs and lows of the range, the extreme levels. Okay? So next, I adjust these levels to get the most number of touches. I'm going to show you what I mean by this. Right? So let's take a look at a few chart examples to say illustrate the concept. So here we have the chart of silver on a daily time frame, right? To me, this looks like an area of resistance, right? And then this is an area of support, right? So let me explain what I mean by getting the most number of touches. If I want to adjust the resistance to the extreme highs, I will ignore these highs over here as it only have touches, one touch, right? Instead, I will shift it down lower where I have one touch and then two touch, right? Maximizing the number of times price interacts with the resistance level. Does this make sense? Okay. So the same one for this one over here, right? For this low over here, if I were to place my area of support at this extreme low, I will ignore this low over here. Again, aiming to maximize the number of touches, I will shift this up slightly higher. And now you can see at this point, I have one touch, two, and three. So in fact, I can push this up slightly higher, maybe even to 4 touches over here. Okay, so this is where my area of support will be, right? So a quick tip for you. While the support and resistance are areas on your chart, I prefer to draw the extreme levels, highs and the lows. However, I treat these levels as an area on my chart, as a zone, right? As a zone and area. Okay? So if you find this challenging, right, to treat these levels as an area on your chart because they look like lines, right? So here's a tip for you, right? You can use the rectangle tool. Just highlight this area by dragging it across. So for instance, over here, right? If you want to use this rectangle to cover as many touches as possible, your support would look something like this. Okay, does this make sense? Right? So if you see this resistance and then this is support. This is how you draw the support and resistance in a ranging market. So now next, let's talk about how to draw the support and resistance in a trending market. Okay, so when it comes to drawing support and resistance in a trending market, there are two things that I focus on. Number one, right? I want to identify 3 most recent swing points, which I will explain to you shortly. Okay? Number 2, right? I will prefer to adjust the support and resistance level to get the most number of touches. So what do I mean by the 3 most recent swing points? So let's say the market is in an uptrend. How would I draw my support in this case? Right? As you can see here, I will probably draw it at this level, this one here, and this here. So these 3 swing points are enough because from the looks of this chart, I know that if the market should pull back, it will likely come into one of these 3 areas, either here, here, or here. Okay, so I don't need any more levels on my chart because if the market comes back and retests this swing low, I might not want to buy, right? At this point, the market could collapse further down. So this uptrend might shift, possibly turning into a range market or even a downtrend. So in a downtrend, I will look for selling opportunities. So this is why I don't clutter my chart with too many levels when the market is trending. If price breaks these 3 levels that I've drawn, my focus now would be on selling at the previous support, which could become resistance. So I want to trade in the direction of the trend, right? That is why I limit myself to not more than 2 or 3 swing points on my chart for a trending market. Okay? So again, the same concepts apply. I like to adjust this level to capture the most number of touches. So I might shift this one to here, getting 1 touch here, and then another one here. Right? Similarly, right, for this one, I have 1 touch here, 2 touch here, and maybe even 3 if I shift it slightly higher. So it's the same for this one. If I have 1 touch, 2, and if you look back over here, this makes it 3. Alright, so with that said, let's do a quick recap. So number 1, the support on your chart is where the buying pressure might arise, so encouraging the price to move upwards. It is an area where traders expect demand to exceed the supply level, right? Potentially leading to price increases. Number 2, resistance designates a zone on your chart where the selling pressure might arise, leading to a decrease in price. Number 3, when the support is broken, it could transform into a resistance and vice versa. So when a resistance is exceeded, it could switch to act as a support. Number 4, in a ranging market, I draw the support and resistance by identifying the highs and the lows of the range. So these help me establish key levels where price movement tend to pause or reverse. Number 5, for trending markets, I focus on 2 to 3 most significant swing points on the chart to draw my support and resistance, swing highs and swing lows.
So far, I created a free 5-part training that shows you exactly how I trade. Check out the link in my bio.